It's late, and you're looking at your bank account again. You see the same numbers. Rent is coming up, your bills are paid, and what's left feels tight. But tonight, there's a small difference. Because now, in a separate account, there's an extra $1,000 that arrived this month. You didn't work extra hours or get a bonus. It just showed up, all on its own. For the first time, that number in your account isn't just for surviving until your next paycheck. That extra $1,000 each month does something powerful to how you think. You don't feel wealthy, but you don't feel broke anymore. And that shift changes everything. Welcome to Invest Easy 101. I help beginners understand finance not with confusing terms, but with clear, simple ideas. If you've ever felt stuck in a cycle of earning and spending, or wondered how people build real financial security, you're in the right place. Today, we're not talking about getting rich quick. We're talking about a single, powerful milestone, earning your first $1,000 a month in passive income. It's a game changer for how you see money, risk, and your own future. I call this the 1K rule. Here's the core idea most finance videos miss. Moving from $0 to $1,000 in monthly passive income isn't just about the money. It's about crossing a line in your mind, the anxiety threshold. Below this line, every money decision is made from fear. Above it, you start making decisions from a place of calm and choice. This explains why some people build wealth steadily, while others stay stuck. Let's be clear what $1,000 a month really means. It's not about luxury, it's about basic security. It can cover groceries, a utility bill, or part of your rent in many places. Most importantly, it quiets the constant worry in the back of your mind about what if. When you know that $1,000 is arriving every month, no matter what, your entire mindset begins to relax. You stop planning only for the next emergency and start planning for the next opportunity. Research shows that people with even small, reliable passive income make very different choices. They are more likely to invest, to ask for a raise, or to try a new side project. Not because they are braver, but because they have a small safety net. That net lets them think beyond the short term. The power of the 1K rule isn't the exact dollar amount. For some, the shift happens at $800. For others, it might be $1,500. But for many, $1,000 a month is the point where money feels less like a daily crisis and more like a tool you can use. It's the crossing point from financial stress to financial stability. Now, why does this feel more achievable than the giant goals you often hear about? When someone says you need $1 million to retire, your brain shuts down. It feels too far away to even start. But $1,000 a month? That's a target you can break down. To generate that from dividends, you'd need to invest a significant amount. From a rental property, you'd need a down payment. From a digital asset, like an online course or guide, you might just need your time and knowledge. The point is, there are multiple paths. The beauty of the 1K rule is it gives you a clear near-term finish line. Every bit of passive income you create gets you closer to that mental shift, from anxiety to having options. It's like the first step out of a hole is the most important one. But here is the most common mistake, and it's a big one. People get their first $100 or $200 in passive income and immediately spend it. They treat it like a bonus for a nicer dinner out or a subscription they wanted. This destroys the entire psychological benefit. The power of the 1K rule only works if you let that money compound, which just means reinvesting it to grow more. Think of it this way. If you have $1,000 a month coming in and you reinvest it, you're building a snowball at the top of a hill. That reinvested money starts earning its own money. Over years, this creates a powerful cycle. People who build lasting wealth understand this. The first goal isn't to spend more, it's to build more sources of income. They live below their means not to be cheap, but to be strategic. The mental shift at $1,000 is powerful, but it's also fragile. If you spend that new income, you're back to living paycheck to paycheck, just at a slightly higher level. But if you keep your lifestyle the same and reinvest, everything changes.
You can take smarter risks, you can negotiate better, you can wait for the right investment instead of jumping at the first one. These better decisions then compound your growth. The most tempting moment comes right after you hit that $1,000 mark. Your brain wants to celebrate. It tells you you've made it, you can relax a little. You might start thinking about small upgrades, a better phone plan, eating out more. This feels responsible, but it's actually the biggest trap. That first $1,000 isn't the reward for your hard work, it's the seed for your future financial security. Let's look at the math plainly. That $1,000 a month represents the potential to buy future assets. If you spend it, you are trading a lot of future growth for a little present comfort. Think of it like this. Every $100 you spend from that income might be costing you $300 or more in future wealth, thanks to lost compounding. That's a very expensive takeout meal. Wealth isn't built from a single large sum. It's built from consistent small actions protected from lifestyle inflation, which just means increasing your spending every time your income increases. The wealthy see their first passive income as fuel, not a prize. It's the entry ticket to a game where the rules finally start working in your favor because you have the buffer to play the long game. Once you've proven to yourself that you can build one stream of passive income, your mind starts to see possibilities everywhere. That side business idea seems more realistic. Investing in the stock market feels less risky. This is the shift from a scarcity mindset to an abundance mindset. Before the $1,000 buffer, every decision feels urgent and risky. After it, with the income reinvested, decisions become about optimization, not survival.
Calm, trustworthy, authoritative, and simple. This is the critical difference. Scared money makes bad decisions. When you're anxious about bills, you might sell an investment the moment it dips or avoid opportunities altogether. But with a $1,000 monthly buffer, you can be patient. You can research. You can say no to bad deals and wait for the right one. This calm, strategic approach is how sustainable wealth is built, piece by piece. The hardest part isn't learning about dividends or real estate. The hardest part is managing your own psychology. Your brain will rationalize spending that new income. You'll tell yourself you deserve it, or that a small upgrade is an investment in yourself. This is called lifestyle creep. It's subtle, but it will stop your growth completely if you don't recognize it. Remember the true purpose of this milestone. The $1,000 a month is not for improving your current lifestyle. It's for buying your future freedom. It's the foundation. The pathway from $1,000 to $10,000 in monthly passive income is actually shorter than going from 0 to 1,000 because you've already learned the skills and, more importantly, mastered the mindset. So what should you actually do when you hit the 1K rule? Celebrate the achievement, but not with your wallet. Acknowledge your discipline. Then set up automatic reinvestment. Send that $1,000 straight to an investment account. Your goal is to protect this buffer at all costs. It represents more than money. It represents choice, security, and a new way of thinking. Let's talk about what this security really provides. That steady $1,000 acts as a shock absorber for your life. When your car needs a repair or an unexpected bill arrives, it doesn't trigger a financial crisis, it becomes a manageable inconvenience. This psychological space is priceless. It allows your higher brain, the part that plans and strategizes, to work, instead of letting the panicked survival part take over. Understand what this milestone does not do. It doesn't mean you're set for life. It doesn't mean work is optional. What it means is that you are no longer one problem away from a major setback. You've moved from a state of fragility to a state of resilience. This resilience is the platform all future growth is built upon. Without it, progress is shaky and fear-driven. With this buffer secured, your focus should shift from building the first $1,000 to building the next stream. The process is now proven. You might start a second, smaller stream alongside the first, or you might reinvest all the income to make your primary stream grow faster.
The strategy is up to you, but the principle is the same. Protect the base, then expand. You will face external pressure. Friends or family may see your discipline as having extra money to spend. You must be clear in your own mind. This isn't spending money. This is capital, money that is working to buy your future independence. Saying no now is how you say yes to a much bigger future for yourself and for them. This is where your relationship with money fundamentally changes. Before the 1K milestone, money is just for immediate exchange, traded for things and services. After, while you still use money for living, a portion of it transforms into capital. Capital is just a formal word for money used to build or buy assets that create more money. Your $1,000 monthly stream is capital at work. Every dollar from this stream that you reinvest is a soldier you're sending out to bring back more. Every dollar you spend from it is a soldier lost. The math of compounding isn't a mystery, it's a simple rule. Money making money builds slowly at first, then accelerates. But it only works if you keep the soldiers in the field, not if you spend them as soon as they report to duty. The true magic begins now. With proof that building income is possible, you start seeing opportunities differently. A high-yield savings account or a dividend stock isn't just a random choice, it's a deliberate tool in your system. You begin to think in terms of systems and reliability, not just luck or a single paycheck. This is the mindset of an investor, not just a consumer. To be clear, this isn't about depriving yourself forever, it's about timing. The goal is to reach a point where your passive income is so substantial that upgrading your lifestyle doesn't threaten the foundation. That point comes much sooner if you don't raid the foundation early. It's a strategic delay, not a permanent cancellation of life's rewards. In summary, the 1K rule is a psychological trigger wrapped in a financial goal. Hitting $1,000 in monthly passive income rewires you from scarcity to stability. But the rule only works if you defend that income from lifestyle inflation. Reinvest it, protect it, let it compound. Use the security it provides to make calmer, smarter decisions. This milestone proves the most important thing, that building wealth is a process you can start now. You don't need a fortune to begin. You just need to start building that first stream, protect it fiercely, and let the powerful mechanics of patience and compounding do their work over time. Your future self will thank you for the security and the options you create today. Thank you for watching. If this simple, step-by-step approach to investing resonates with you, please subscribe to Invest Easy 101. We break down intimidating financial concepts into clear, actionable steps for beginners. Your journey to financial confidence starts with the first step.